Assalamualaikum and good day to Doctor. My name is Siti Nadhirah with Abdul Rahman. My message number is 287989. Firstly, I will give an introduction about what is family takaful and conventional insurance. Takaful is a popular Islamic insurance system in Malaysia based on the concept of sharing, responsibility, cooperation and interest among participants. It cooperates under the Sharia law which prohibits the riba, gara and gambling. The system consists of policyholders, takaful operators and the Sharia board. Participant contributions known as tabaru are used to fund the takaful funds, which are then used for claim and investment. The system ensures long-term financial protection. Family takaful plans include term takaful, whole life takaful, and endowment takaful, which combine life coverage with saving. The uniqueness of family takaful is the distribution of surplus among the participants. Conventional insurance, on the other hand, is a modern financial system that provides financial protection while insurance shouldering all risk and reward. It consists of insurance company, individual and brokers, and offer various types of insurance such as property and casualty, life insurance, health insurance, and auto insurance. The difference lies in the distribution of surplus among the participants. As for the purpose of family takaful is a financial plan designed to provide asset protection for participants in the event of unexpected events like death, severe illness, or permanent disability. It aims to increase wealth by putting payments into long-term personal saving, particularly for emergency, pension, or future saving. Family takaful also meets Sharia goal of maintaining wealth, posterity, faith, and self-awareness, leading to social harmonization. It encourages the practice of tawakal, complete reliance on Allah after all effort have been made to achieve this objective. Meanwhile, conventional insurance focus on risk transfer, financial protection against potential loss, and managing wealth by protecting against threats and unexpected events like property loss or damage. It also includes mandatory insurance types like motor insurance, which help individual or business comply with legal requirements. Both family takaful and conventional insurance serve different purposes and contribute to social harmony and adherence to Sharia principles. As for the market share, family takaful, a type of insurance, has seen a significant growth in Malaysia from 10.12% in 2017 to 45.6% in 2022. The market share has shown strength with yearly contribution from new business remaining above 2 billion, totaling 2.19 billion. The family takaful new business industry report 10.6 billion in gross contribution and 18.3% increase from 8.5 billion in 2021. The success factor include ownership, business strategy, and market structure of takaful insurance. Meanwhile, the general insurance market in Malaysia experienced at 2.4% growth in 2021 due to COVID-19, following a decline in 2019 and 2020. The economy is expected to expand by 5.5% in 2022, supporting future growth in conventional insurance. However, the takaful industry market share is expanding faster than conventional insurance according to global data. And lastly is the characteristic of family takaful and conventional insurance. Family takaful is a long-term agreement with a customary contribution amount determined by tax, income tax, cost, and mortality. Both parties must uphold the idea of the highest good faith to verify the accuracy of their representation and declaration. Family takaful contracts have right and duty for both participants and operators, and the covered risk increase with the duration of the contract. The plan also has permissible takaful interest where individuals have an unlimited interest in their life and spouse life. The contract is terminated when a claim is settled. For the conventional insurance has similar characteristics such as premium, redeemable plans, and limit and exclusion. The insurance plan pays coverage in lump payments or installment depending on the type or loss. Exclusion clauses limit the amount of claim to prevent the insured from making a profit or benefit from the insurance claim. The exclusion clauses also state that some risks will not be covered by the insurance company under specific events.
Assalamualaikum and good day to Dr. Syafiqi. I am one Huwaina 296817. So for my part, I will explain about the similarity and differences between family takaful and conventional insurance. So both family takaful and conventional insurance aim to provide protection against unexpected financial losses. Because based on Section 2(1) of the Islamic Financial Services Act 2013, takaful is defined as an arrangement where participants mutually contribute to a shared fund. So the fund will provide financial benefits to the participants or their beneficiaries when specific events are agreed that have been agreed in advance if they occur. Meanwhile, conventional insurance, the insured pays the premium to transfer a specific risk to an insurance company, which is intended to serve as a financial safeguard, make sure that individuals or families that may face life challenges can survive without substantial economic adversity. Next, for the first differences between family takaful and conventional insurance is the adherence to Sharia rules. There are three main elements, which are riba, gharar and maisir, which do not exist in family takaful as they are categorically forbidden in Islamic financial instruments, because the bans are actually intended to mitigate the formation of excessive debt, speculation and also negative economic growth, which eventually can result in economic instability. But in conventional insurance, these three elements may exist because although people are aware of the inclusion of these three components in conventional insurance, certain individuals may still purchase the coverage because usually conventional insurance companies, they are well established corporations. But then, however, the decision to opt for either traditional insurance or takaful, it relies on an individual's personal convictions, financial circumstances and also the accessibility of both services. The last differences between family takaful and conventional insurance is the allocation of risk. In takaful, the risk is collectively borne among the takaful provider and the participants. So basically, it focuses more on risk sharing rather than risk transfer. Meanwhile, in conventional insurance, rather than risk sharing, it uses risk transfer. The insured transfers the risk to insurance operator who act as a third parties rather than being borne by the participants themselves. Policyholders then pay the premiums to the insurance firm, passing the financial responsibility of the potential forthcoming losses to the insurer. The insurer, in return, undertakes the obligation to provide benefits to the policyholders' beneficiaries upon the occurrence of the insured event. And that's all from me. For the next part, Syamimi will explain regarding the advantages and disadvantages of family takaful.
I will explain about the advantages and disadvantages of family takaful. The first advantage of family takaful is guaranteed financial protection based on Islamic principle. The primary benefit of this system above traditional insurance is that it ensures participant financial protection in compliance with the Sharia regulation. In order to guarantee the success of this study and trial, established Islamic Mudarabah company that operate in multiple Islamic nations have provided guidance. To make it simple, the family takaful system offers a collective protection plan for all of its members. The second one is provide with a protection and long-term saving. If a policyholder or beneficiary experiences a tragedy, they will get financial benefit. A family's protection against risks like illness or death is provided via family takaful plan, which have a predetermined duration. In addition, since a portion of their contribution will be placed in an account specifically for savings, individuals will benefit from long-term personal savings. Next, get more income. With a family takaful plan, families can potentially raise their income in a number of ways. One method is by allocating a part of their takaful contribution to potentially profitable investment instruments. Participating in income-generating activities or programs provided by the takaful provider is another option to potentially enhance income through a family takaful plan. Lastly, investment tool. Family takaful is an investing tool that has several advantages. For instance, it can provide a sense of security and peace of mind while also enable people and families to saving and making plans for the future. Furthermore, certain takaful products could provide investment opportunity that let users profit from their contribution. Now, let's move to disadvantages of family takaful. The first one is lack of registered takaful operators. People and families may have limited options when it comes to selecting a plan that suits their needs if there are fewer takaful operators to pick from. As a result, finding a plan that provides coverage, costs, and other aspects that are significant to them may be more challenging.
Takaful operator might be able to charge greater premium for their product due to higher costs and decreased competition. The second one is lack of exposure to the Takaful system. Lack of familiarity with the Takaful system has a number of drawbacks, especially for people and families who are thinking about utilizing Takaful for their insurance and financial protection needs. This is because lack of comprehension of family Takaful, restricted access to Takaful product, misunderstanding, and lack of faith in the Takaful system, and lack of demand where Takaful is not widely known, there can be less of market for Takaful's item.
I want to explain about the advantages of conventional insurance. First is financial security for beneficiary and risk transfer. The insurance provides financial protection to beneficiary in case of policyholder death. In transfer risk to insurance company, reduce financial distress. This reduces family struggle to cover expenses after a death. Second is tax advantages. Life insurance policy in some jurisdictions offer tax benefit, providing tax-free assistance during difficult time. Universal of whole life plan can grow in value tax deferred over time, making them more appealing for long-term investment gain and protection for loved ones. Third, financial security. Insurance offers security in case of cover loss, cover cost of life, property damage, or health issue, preventing bankrupt or financial difficulty. Lastly, specialty coverage. Commercial insurance policy provides specialty coverage for various risks. The flexible approach allows policyholders to choose coverage options that suit their needs, offering a personalized risk management solution. Disadvantages of commercial insurance. First, deductibles. Deductibles are predetermined amount insurance must cover out of pocket before insurance cover takes effect. Deductible can lead to monthly premium but also increase policyholder responsibility for medical expenses. Deny claim. Insurance company may deny claim due to policy exclusion of inadequate documentation. Policyholder should review policy document to understand exclusion and limitation. Adhere to specific claim filing procedure is crucial. Next, obligation to pay premium. Mandatory premium payment based on policy term can increase over time. Premiums are mandatory regardless of claim filing. Policyholders for 20 years without claim filing can result in expenses. This may create the pressure of financial resources being spent without benefit. Lastly, challenges in underwriting. The process of insurance company assess risk can be challenging due to factors like driving record of healthy examination. Individuals may choose not to obtain insurance or consider financial options if they feel they are paying too much.
So there are several companies that provide family Takaful in Malaysia. Number one, Zurich Takaful Malaysia. Zurich Takaful Malaysia offer 4 benefits to the insured person. First, death and total permanent disability benefit. Number 2, high protection. Number 3, family care privilege. And lastly, Ziarah Plus. The second company is that provide family Takaful in Malaysia is Great Eastern Takaful Berhad. These companies offer 7 benefit to the insured person. Number 1, high sum covered. Number 2, death benefit. Number 3, total permanent disability benefit. And number 4, critical illness benefit. Number 5, compassionate benefit. Number 6, protection booster benefit. And lastly, maturity benefit. AIA Public Takaful Berhad. This AIA Public Takaful Berhad offer number 1, death benefit. Number 2, total permanent disability benefit. Number 3, critical illness. Number 4, maturity benefit. Number 5, spouse or child incidental death benefit rider. Number 6, waiver of contribution rider. And lastly, yearly critical illness benefit to the rider. So the companies that provide conventional life insurance in Malaysia. Number 1, Great Eastern. Great Eastern offer several benefit to the insured person. Number 1, high coverage. Number 2, accidental death. Number 3, death and total permanent disability benefit. Number 4, protection against mosquito-borne disease. And lastly, emergency medical assistance. Next, companies that provide conventional life insurance in Malaysia, which is Zurich Malaysia. Zurich Malaysia also provide a lot of benefit to the insured person. Number 1, death benefit. Number 2, total permanent disability benefit. Number 3, spouse care privilege. Number 4, no lapse guarantee. Number 5, maturity benefit. And lastly, flexibility to adjust protections, coverage and investment level. And lastly, companies that provide conventional life insurance in Malaysia, which is RHB Insurance Berhad. So number 1, the benefit they provide, which is lifetime guaranteed cash payment. Number 2, death and total permanent disability coverage. Number 3, accidental total permanent disability. And lastly, 3 optional riders to boost up the protection.
Assalamualaikum warahmatullahi wabarakatuh. My name is Wirdatul Binti Suhaimi. My metric number is 29684. So today I'm going to present about my part, which is conclusion and also recommendations. So I'll begin by concluding about family takaful and also conventional insurance. So family takaful, deeply rooted in Islamic principles, emphasize collaboration, restructuring and strict adherence to Sharia law. This is evident through mutual responsibility, and the Takaful falls rules in providing financial assistance during forcing disaster. Operators actually plays a crucial role as active managers, engaging individuals in participatory role for both receiving and also providing protection. The system also offers avenues for long-term savings and also potential additional income and through Sharia compliance investment. So, contrast with conventional life insurance operates on risk transfer principles, offering a financial protection with challenges like deductibles and potential claims denials. The decision between family takaful and conventional insurance actually depends on individual beliefs and also the financial consideration. Catering to diverse preference in fortifying future financial well-being. Now we are moving to the area of improvement that both family takaful and also conventional life insurance can consider. So both family takaful insurance and conventional life insurance have room for improvement. Conventional life insurance in particular can enhance its services with a focus on improving customer services. Challenges such as issues with on the platform and issues with claims process need attention. So for customer services, to address this challenge, conventional insurance can effectively handle customer issues, improve responsiveness towards customer, and implement more flexible payment alternatives. Online platform should be user-friendly, as considering the modern digital era where online transactions are the standards right now. So now for the claim process. Research indicates that consumer or customer face difficulty accessing policy details and making payments through online platform as mentioned before. To resolve this, insurance companies should actually focus on enhancing the user experience and additional efforts to expedite and simplify the claims process. Providing clear information and easy online filling alternatives can boost consumer or customer happiness and enhance the industry reputation. Insurance, we are moving to family takaful in terms of improvement that they can consider. So, unlike traditional life insurance, family takaful is actually not well known enough, mainly due to consumer unfamiliarity about that. Providers in Malaysia are actively working to close the knowledge gap through awareness campaigns and educational activities, offering through materials to make complex idea more understandable to the consumer or customer. So for the second one, transparency in family takaful. What about this? It's actually a key component of takaful is actually transparency. It's actually different from conventional life insurance. Family takaful operators are taking steps to guarantee openness by providing clear information about terms and conditions, exclusion, coverage limitations, and the claim procedure. Well-trained operators are essential to help consumers navigate the complexities, building trust and understanding between the company and also the consumer or customer. So, to conclude all this, The journey to make family takaful a relevant option in Malaysia's insurance market, involving a raising customer knowledge and guaranteeing transparency between both sides, which are company and also consumer. The choice between family takaful and also conventional insurance ultimately depend on someone's individual beliefs and financial consideration. Okay, now that's all from me. Thank you for listening and enjoy the day.